Yo guys, hope that you're well. I'm just gonna quickly show my market entry for today. I didn't take it on TradingView, so I'm just showing you the execution to just show you guys that I did take it. Um, and then we'll just go into depth after I show you this is the entry. Right. Okay. See if you go see that is there. This one there. Right. The entry is right there. Okay. Cool guys. Let me remove that. So let's get into the business. So pre-market we had the engineered liquidity, the engineered buy side liquidity. So they didn't take that buy side, right? And then in pre-market they took it, and we had this rundown. And in the previous video where I did the market overview, I said look at how they use this, right? This fair value gap. I took it off, but I can quickly show it for you guys, right? See there, it was used, there, I told you guys, it will be used. And I know on that level, this is a 1 minute on that same level. So I was looking at that 1 minute as well, right? Um, so this is a 5 minutes on the rundown and the 1 minute on the run up. Oh, well, these fair value gaps, I marked them out because it was used to go to where? To there. The last fair value gap after we took the engineered liquidity was this, right? SMT on that high, and check how they struggled to get above. So they came down, again up, and check how the bodies are closing, right? And then we run down. Now my entry was there as we close below the first presented, and then again the first one leaving the first presented, this fair value gap. I was okay with permitting them to go into that because my stop loss was there. Okay. We ran down again that 5 minute I mentioned to you guys. Well, in the market overview, they use that. There's a 1 minute precisely on it. Precisely. You can see how they use that as a reclaim. So they inversed it to go up into this fair value gap, came down below it. So they below, reclaim fair value gap, tap into it, run down. This is now order block. And when we got that order block, I was already trading my stop loss a bit, like just to here to that top, because they can still come to this fair value gap, but if they leave that, I'm already my stop loss is already in this high. So we left everything, this fair value gap right there, right, was inversed. Again, I marked this first presented after we left that, but just to go based off of, you can even take a trade on both ends from that 5 minute I mentioned, to the buy side, to the sell side, order block. It's just that easy. This 5 minute and 1 minute overlapping. Check out, we closed on the lower end, tapped the consequent encroachment and ran down. Same with this one. Let me try and see how the bodies are continuously on the lower end. We tapped the high, but still close at the lower end. And then this wick, pre-market, we made that wick. I was looking at how they use it. They were respecting it the whole time, so I knew they'd want to come and take the lows again. Because, let me just move this so you guys can see the quadrants being used, right? Just remove that for you guys. This is the opening range gap. We didn't fill in any of the opening range gap. It just ran up, so I was expecting a run down. And we came to equilibrium, or well, consequent encroachment, sorry guys, of that opening range gap. Check where we turned, What more do you want? It's as simple as that. We could possibly see them come back to this Fairley Gap because it's on the opening range high. So they can tap into this, even this, and then pursue the other engineered sell side liquidity, which is this. Check how clean that lows are. They left it like that for a reason. But yeah, good session for markets. Very clean, clear, and precise. Hope you guys enjoy the rest of your day. Stay safe, and hope you found this insightful. Cheers.